Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have John Fischer, Chief Investment Officer of Accion, to discuss creating a fair and inclusive economy by developing and scaling cheaper, more accessible customer financial solutions. John, it's great to have you with us. Welcome to Trade Talks.
Thank you very much. Great to be here.
You got it. And every day the financial system fails nearly 2 billion people. They are the small business owners, smallholder farmers, and predominantly women. Many of us often take for granted things like credit cards, internet banking, easy money transfers, the safety net provided by products like insurance, but these are products that the underserved don't have access to. How can access to these services improve the quality of life?
No, thank you very much. And that's exactly the problem we're trying to solve is those 2 billion that are really poorly served by the traditional financial system. And what we're really trying to do as Accion, which is a global not-for-profit that's really focused on financial inclusion, is working to develop and scale cheaper, more accessible, customer-friendly financial solutions for those people who are left out of the financial system traditionally. So we help to build innovative companies around the world over the past 60 years. We've helped build some 230 financial service provider, banks, fintechs, financial services providers across 75 countries that are serving more than 350 million people globally.
So John, tell us the types of solutions that you're providing and how do you work with your partners?
So we work in three different ways. One, we're providers of equity capital, and these institutions need growth capital in order to serve their customers. We also provide advisory solutions to help them, especially recently, digitize their operations and take advantage of the growing digital footprint of many of these underserved customers who now have access to cell phones, smartphones, et cetera. And then we also conduct in-depth research through our Center for Financial Inclusion, where we research and share learnings on how better to serve customers, how to protect these vulnerable customers against predatory practices, et cetera, as well as how to include women more in the financial services offerings that these companies can provide.
How have high interest rates made an impact?
And this has been a concern. Very clearly, our companies went through a difficult period during COVID when many of the customers that we're trying to serve who are, living day to day, couldn't open their businesses, couldn't operate. Obviously, our companies tried to support them during that period, tried to provide them with loan extensions, with additional financial services in order to make sure that they could make it through that very difficult period. Coming out of COVID, clearly the high interest rate environment is impacting our institutions in different ways. So we have banks and finance companies in our portfolios that clearly are seeing, as they renew loans, costs going up there. We really don't want to pass those costs on to the end consumers who are already vulnerable. And so we're looking for ways to be more efficient. And I think digitization is one of the ways that we can get efficiencies out of these institutions. We're looking at disruptive technologies through our Accion Ventures program in order to really come up with ways that we can reach out further, reach out more agilely, and reach out more cheaply to these customer segments. And then, I think what we've seen there, though, is that the downturn in fintech funding is affecting our institutions as well. There, we've always really focused on unit economics and making sure that our companies have solid unit economics. And there, the focus has been on ensuring that we're working towards break even, working towards financial sustainability, and that we have a robust runway of cash to last us 12, 18, 24 months.
What about the impact of interest rates on Series C and D plus stage companies specifically?
Yeah, so I think that's where we've seen most of the downturn on the fintech side. It's been much harder to raise that sort of capital. I think we are finding that is starting to turn the corner at this stage. And we are seeing deals close for good companies with solid unit economics that have really demonstrated that path to profitability that everyone is talking about. So I think the sort of fundamentals have come back into force, and we're seeing that those fundamentals do pay off with additional capital.
Right. And John, I think the key question is, how will greater fiscal discipline be a long-term positive?
Yeah, I think in many of our countries, we are seeing this as being an issue. It obviously affects our end clients significantly. Very often they look to government for government benefits or subsidies and things like that. That many of the countries that we operate in are ending because of more fiscal discipline. I do think these steps are necessary, but we're very conscious of the impacts that they have on our end clients, and look for long-term ways that governments can continue to promote the economy, promote this sector. I think one of the elements that we're always very conscious of is the impact that governments like in India have had on developing the financial infrastructure in order to allow these very small businesses, smallholder farmers, get better access to loans, to money transfers, et cetera. And so, working with government regulators is one of the things that we're trying to do to make this happen. And we have convenings like Financial Inclusion Week next week, which is an industry event that we organize through our Center for Financial Inclusion, in order to bring people together, regulators and other thought leaders, around the problem of financial inclusion in emerging markets.
And finally, why is working with government regulators key to making this happen?
I think what we've seen around the world is that infrastructure that gets set up. Obviously in the physical world, it's the ports and the highways and the airports. In the financial world, it is those digital rails, payment systems like the India stack in India that we're seeing, the payment systems in Brazil that are coming up, that really facilitate very small transactions, which is what our end customers need. These are people who are earning day to day their salaries, and they need to be able to make very small payments and receive very small payments in order to conduct those businesses. And so that is a huge benefit that we're seeing coming from the work that governments are doing to lay that groundwork for the businesses we want to serve.
All right, John, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you very much.